It's me. I apologize. It's me. All right, as I was saying, all right, today I'm super angry. All right, now I'm super angry. There's so many things that frustrates me right now. Okay, now is it the market? Is it how retail investors are thinking? Right, what exactly is frustrating me? All right, let me get started. All right, and I'll share it with all of you. Okay, all right, what's going on? Why am I so angered? Why I'm so agitated? All right, what exactly is happening? All right, now, so once again, welcome to Portfolio $2,000 Cash Flow live with Impossible Terence. Now, we plan this portfolio live every single Friday as best as I can, unless the schedule clashes, right? You see me make moves, you see me take live trades, right? All these are done on a live account. They are recorded via a live portfolio sheet that you're seeing sharing on the screen right now. Okay, but if you go back to all our past week sessions, right, you can verify all the trades, and these are live performance, right, as we take trades, right, week after week whenever the market presents it to me. Okay, now, so without further ado, let me start my session over here. Right, so welcome to another session of our portfolio building over here. Right, and okay, now I need to do this. Okay, if you're joining us for the first time, right, please go over to the link streamyard.com/Facebook. Right, make sure you click on the profile, all right, the Facebook button, so that we can see you, right, in your profile when you're leaving comments, right, throughout my live sessions later on. Okay, all right, now, so with that, okay, let me get down, okay, to why, all right, exactly am I so frustrated. Okay, all right, now, so Andy, congratulations over here. All right, now, so you made a speculative bet. All right, it turned out well. All right, so congratulations. Okay, all right. Hi, Eileen. Hi, Henry. All right. Hi, Chong. Hi, Andy. Hi, Wiki. All right, Maudrine and Jeffrey. Okay, now, so thank you very much for joining me once again, and always Jason. Yeah. All right, now, so good to have all of you back. Now, so let me get started. All right, disclaimer first. All right, I will be talking about live trades. I will be sharing live trades that I want to put into my accounts. Right, trade management actions, be it new trades or adding on cash flow to existing positions. All right, now these are all based on my own judgment. All right, my own thought process. All right, now, so please do all your due diligence, right, before deciding, all right, if you can accept the risk involved in any form of trading. All right, okay, so please do not follow these trades unless you're fully aware of all the risks, right, and are willing to take it on your own. Okay, all right, so these are just thoughts that I'm sharing with all of you. All right, now, so let me get started. Today, I'm really, really frustrated, ladies and gentlemen. All right, why? Why am I so frustrated? All right, now, because, all right, the market continuously, right, rips off retail investors. Yeah, okay, all right. And what frustrates me, right, is that retail investors consistently, right, exhibit behaviors that allows the market to rip them off. And that's what I'm upset about. Right, now, I know I may be a mentor over here, right? And as a mentor, my job, right, is to bring all these dangers to you. Yeah, okay, so if I'm going to sound harsh, right, I will do it. Yes, this is a Facebook session for the public, right? So if you're joining me for the first time, I apologize if I sound really harsh, right? But I mean well. I mean your money well, right? And that's very important to you, right? And I want to tell you that's important to me as well, because you come here every Friday, you're investing your valuable time. Right, I want to make sure you learn something, all right? And even, all right, although it's a Facebook live sessions for the public, it's free, right? I want to make sure, right, that I can help you become a better investor, right? That's always the goal of why I commit time every Friday to insist on doing this session live. All right, now, so let me show you what I mean when I say, right, that the market consistently rips retail investors off, and why retail investors consistently, right, fall into that trap. Right now, so many of you want an update of the market, so let me give it to you right now. Okay, now, so I'm going to bring over to the screen over here, right, and all of you can see, right, the SPY. Yeah, okay, all of you can see the SPY. Okay, now, so let me do a sound check over here. All right, can all of you hear my sound now? Right, am I audible? Or is there still no sound? All right, thank you very much, Maudrine. So my mic is working fine. All right, that's really, really good. All right, now, so I do have a Facebook. I do have a Facebook user. All right, so do remember. All right, okay, I need you to go to www.streamyard.com, right, /Facebook, right, and then click on that link. All right, okay, now, if you have done it before, right, it just means that somehow the system has erased you, right? We need you to do it over again, okay? Okay, so all of you have heard my anger tone, yeah? All right, so let me continue. right now. So I just want to ask all of you who are joining me right now, okay, if you look at this chart, all right, if you just look, all right, from a simple logic, okay, from a simple logic, right, look at all the lines that I have on the screen, all right, look at the price of the candles, all right, and, all right, today we are here, right, today we are here, all right, and this is the SPY, which represents the S&P 500 ETF stocks, right, which means it's guided by the entire index pricing itself. Right now, looking at where it is right now, can all of you tell me, right? Can all of you tell me, all right? Is it gonna go up, all right? Or is it more likely, all right, for it to come back down? All right, what will you say? Leave a comment in the chat box, everybody. All right, where does the risk lie now? All right, does the risk lie in the fact that it's gonna be bullish, it's gonna keep going up, all right? Or the biggest risk lies that, hey, you know, it may start coming down from where it is now. Thank you very much, Tanya. All right, so Tanya is putting, all right, come back down. How about the others over here? All right, okay, Andy says trading at resistance. All right, Eileen says down. All right, I'm just looking for a couple more replies, okay? All right, so Michael over here says testing resistance. Good. All right, now, so we have a common tone. All right, so even Jennifer, all right, says that it's down. Now, so we have a common tone. So why are so many of you asking me, Terence, is it bullish now? All right, is the market bullish? Can I buy? Can I buy this? Can I buy that? Can I buy this stock? Can I buy that stock? Why don't you just take a look? Why don't you look? Right? Because it is there. This information is there. Right? Investing is not about how you feel. Investing is not about, oh, Terence, I like this stock. I want to buy it today. What do you think? No. Investing is about making good decisions. And how do you make good decisions? You find a balance. You start from the big picture because all stocks are always guided by the entire stock market, especially if you're trading fundamentally good stocks, especially if you're trading big market cap stocks, right? They have no choice but to follow, right, what the market is doing because they are part of it, right? Can you see where I'm getting at now? Right? So rather than you try to just throw a question, right, and get an easy answer, right, why don't you just start looking? Why do I insist on this? Because if you actually put in an effort to start looking, all right, I can actually help you become a much better trader, a much better investor, not just for today, right, but for a long time to come. Why? Because it gets in here, all right, and you will learn, you will understand, and you will keep doing this after today. Right? Every time you make an investment decision. All right? I hope you see my agitation over here. Why? Because I really care. Right? I don't want all of you to keep getting ripped off. Yeah? Okay, all right. Why? Because the last time when the market was here, ladies and gentlemen, when the market was hitting here, what were all of you asking me as well? Terence, should we buy? Should we buy? Should we buy? That time I was being friendly. That time I was still being nice. All right, and yet, right, this time you're asking me the same question. All right, so I turn back. All right, let me turn back and ask you, all right, what do you think? Number one, all right, okay, I hope all of you are ready to follow me, all right, by typing responses, okay? All right, number one, all right, do you think that inflation has been controlled? What do you say, yes or no? Good. Many of you are saying no. Okay, now how about my next question then? All right, now, so do you think that the interest rates will stop rising or interest rates, has it hit a peak, ladies and gentlemen? So you're saying no as well, which means, right, when interest rate keeps rising, right, money is going to keep getting more and more and more expensive. Right now, next, has oil prices, right, came back down to below $100? Has oil prices broke $100? So the answer is again no. Right now, and then one last one. Right now, amidst this sell-off, that we're seeing right now, even my mouse is playing punk on me. All right, now here I am. All right, now. So we sold off, right? We bounced, right? And then we sold off again, and then we bounced. Have you seen a higher low yet? Right? Which means every time it fell, right, is it still lower than the previous time it fell? And yet, you are asking me, Terence, is it bullish now? Why? Just because the market bounced 1, 2, 3 days? The fundamentals are still there in the economy, but it has overran. Those of you who joined me 1 year ago, what did I keep saying? Right? Would I buy Tesla at 1,000 multiples? No, I won't. Would I buy Amazon at 500 multiples? No, I won't. Right? Yes, I was perhaps 7, 9 months early when I said that. Right? But there are reasons behind why I said that. Because I'm keeping my brain in check. I've been investing for over a decade, so I know, right, what a market crash looks like. I know that markets can come down. I know when markets are very expensive. Right? So I can bang on the table, I can harp on the table, right? But it may fall on deaf ears. Right? But now, right, you choose to wait until now to see the facts. Right? And yet, after seeing the facts, you're still asking me, Terence, can we buy now? Why are you buying? Why are you buying? Because if interest rates have not shown any sign of stopping, that means it's going to keep getting higher. All right. And if it keeps getting higher, right, if you are looking to buy a new house, is it going to be cheaper or more expensive for you to buy that? If you're looking to buy a new car, right, is it going to get cheaper or more expensive for you to buy that? When you're buying groceries for your entire family in the next week, is it getting cheaper or is it getting more expensive for you to buy that? Everything is getting higher and higher. Right now, so when things start to get more expensive, how do you feel? Even you have all the money in this world, but by looking at this, you will still feel ouch. And once you feel that ouch factor, what are you going to do? You're going to cut back. All right. Okay. And when people cut back, all right, they're going to cut back on their investments as well. All right. And when people cut back on their investments, do you know what they do? Can anybody tell me in the chat box? When people choose to cut back on their investments, what's the first thing that they'll do? Yes, they're going to take cash out. Right? If they've invested in unit trusts, if they've taken in funds, they're going to take their cash out. Right? When they take their cash out, what's going to happen to the market? Right? I just hope I'm trying to, give you a sense. Right? Okay, I'm trying to make sense of everything for you. Right? Markets don't go down in a straight line. Right? There was extreme selling. Look, this is nothing short of extreme. Right? There's extreme fear. Right? Okay, but once people stabilize, right, there's going to be a bounce. Right? There's going to be a bounce because they realize, oh, many of these stocks have fallen 10, 20% in 1 week. They look cheap now. So there'll be a little bit of buying taking place. Right? And as these people buy, right, the people who shorted along the way, right, will start taking their profits. Right? And when they take their profits, they will actually buy back their stocks, which adds to the buying demand. Right? And that's why you see this bounce over here. So from a technical perspective, we call this a dead cat bounce. But now the bounce has hit, all right, a horizontal resistance level, right, which is the support level the last time it fell, right? Okay, and then it fell here, right now. So this is going to keep a lid on the market, right? And after that, all right, now let me extend this downward channel line once again. All right, and can you see now? It is not just one resistance line we're looking at, it's two resistance lines we're looking at. All right, so can you see the tremendous difficulty of breaking exactly where we are? All right, and Terence, if it breaks, right? Where can the market go, right? If it breaks, realistically, the next place that the market can go to is 4,000 points, right? And after 4,000, it can hit 4,001. Okay, but that's about the limit. All right, now I say that's about the limit over here. Why? Because of all the reasons that I've highlighted to you just now. All right, once a bounce is set in, all right, okay, the next sell-off will come. Why? Maybe because they raise another 75 points. Maybe because they raise another 50 points. Maybe because oil prices rebounded higher again. Right? There's so many reasons. Right? Have you not realized? Right? When times were good, all the news that came out, right, on your CNBC, on your, what Bloomberg, right, are all good-sided. Right? And now that it's bad, right? What were all the news? It's doomsday tomorrow. Right? These people, right, are trying to make news. Right? They're always on the extreme side. Right? Okay. Now that the market is dead, all right, now that the market has fallen all the way here, right, and then they're telling you, all right, market has crashed. Isn't that too late? Right? Isn't their job supposed to tell you over here that the market is supposed to crash? They don't, because that's not what mainstream media does. So if you have not realized that, you need to stop looking at mainstream media. They're not going to help you, right? They're going to harm you instead. Right? Just spend a little bit of time, right, looking at the pictures, right, and then trying to understand if the market is really expensive or if the market is really cheap. Yeah, okay. Why do I say that? Because, right, if you look at some counters over here, right, now let's look at some market cap, shall we? Right now, so if we run, here we are. Here we are. Let's take a look at the S&P 100, shall we? Right now, so we look at a couple of stocks over here. Right now, so let's take the biggest caps. Right now, so if we take the biggest caps over here, right, we have, what do we have? All right, let's go for a few, okay? Right now, we have, let's go with Amazon first. Why is my mouse not working? Right, here we are. Right, we have Amazon. Right now, first question, ladies and gentlemen. Right now, this PE ratio, right, is also an indication of how much the company is growing. Now, what do you think? Do you think that Amazon, being the size that it is right now, right, is still capable of growing at 55% per annum? All right. Do you think their profits, do you think their revenues will show a 55% profit rise, profit increase? Type yes or no in the comments. Good. No. Right. Okay. And okay, here's the best part, ladies and gentlemen. And just because the stock split, right? Just because the stock split here, right? You decided that it's a good investment. I had tons of emails asking me, Terence, can I buy Amazon now? And when I asked why, oh, because it's split. Right? And those of you who asked me the question, you knew my answer. A stock splitting doesn't add any value at all. Right? The only reason that will make the price rise higher is if they can produce higher earnings per share, but now on even more shares because they split it. And this is terrible. Why? Because this stock split 20 for 1. Can you see? That means for every 1 share, there is now 20 shares. So if the company makes $1 per share before the split, it literally has to make $20 per share now to just show you $1 per share. Because there are 20 shares. So they have to make $20 divided by 20 now to show you $1 earnings per share. Do you think they're going to do that? Do you think Amazon can suddenly make 20 times more? So if they don't, then what kind of earnings per share are you going to see? You're going to see lower. And if they show lower earnings per share, what does that mean? Right? Do you think prices are going to go up? All right, now, so you really got to put things in relevance. A stock splitting doesn't mean that it's a good investment. You need to check the fundamentals, and this is like your first red light over here. It's like a red light that's beaming to you. All right, and here's the problem. Right, if you say that Amazon is expensive, right? If you say that Amazon is expensive, then what does it mean? It means that it has still room to drop. And imagine, right, if Amazon reaches a 30 or a 25 PE, half of where it is, where does the stock price have to go? Half. Are you willing to take the chance? I'm not. I never chose to invest in Amazon. I would never touch it, right? But yet I know many people who are, vested, right, and not here, not now, here, right? Why? All right. Okay. Now, and next one, Apple. Being the mammoth size it is. Yeah. Okay. All right. Now, what do you think of 23%? Do you think Apple, under inflation, under all the China problems right now, under all the China-based production issues that they will face because of the shutdown, because of high oil prices, do you think with these kind of conditions, Apple will be capable of showing a 23%, right, profit rise? If you don't, if this has to drop another 7 to 15 PE, right, which maybe makes a little bit more sense, then how much does Apple need to fall? Maybe about 100. This is a problem, right? Next, another favorite, Disney. Right now, just because Disney has fallen from 160 Terence to 90, this stock has fallen by half. Terence, can I buy it now? How about you tell me, ladies and gentlemen? It still trades at a 67 PE. Is Disney going to grow at 68% in the next 1 year? Is Disney going to grow at 68% in the next year? If you're shaking your head, then why are you buying now? Why? And looking at all these, do you think that because the market is scared right now, that when all these stocks go down, the market has no choice but to go lower even further? That's my concern. That's really my concern. Right? The Fed shocked the market once by giving out a 75 percentage point rise. Right? And look what it did to the market. Right? It literally fell the market off the cliff. All right, no, this is not the market. It fell the market off the cliff. Can you imagine if the next session, right, the Fed has no choice because of inflation continuing to go out of skew, that they have to raise another 75? We can be looking at 3,000, what? We can be looking at 3,200. Yeah, okay, now, so if I've not instilled some fear, I hope I have by now. All right, you just need to make your choices. All right, now, what do I mean when I say make your choices? Because even after the market has done all this, look, the market has trashed, right, almost every investor's portfolio. All right, and this is why, and this is what makes the Friday session live together with all of you very different. All right, why do I say it's very different? Because, right, if we look at how our portfolio stands, ladies and gentlemen, all right, we started, right, this new portfolio in the month of May, right, and we hit our cash flow goals, right, by locking in $2,294, right, in our first month, which is May 2022, right, and then for June 2022, right, we locked in another $2,218, right, which means, right, we started with $100,000, right, and now, right, our portfolio, right, has actually gone up, right. If we add the two cash flows from the last 2 months, our portfolio is up to $104,000 now. That's 4% over the last 2 months while the market is selling off. How will you rate that, all right, as a simple performance? Because we only took action once a week. Sometimes we don't even do anything. right? And now, here's the best part. We are already positioned, right, for the month of July, which is our third month. Why do I say position? Because, right, even if I choose not to do anything from now until the 15th July expiry, right, I'm going to pocket $2,600 in cash flow. Even if I don't add any more new trades, that means I'm already on course to hit 3 months cash flow target in a row. And what's spectacular about this is that I'm doing this amidst a market that's falling, amidst a market that's crashing. That's why I love what I do. Why? Because you can see how I choose my stocks over here is literally almost painless. You see me flipping out these stocks as though, right, they were just easy as 1, 2, 3. It wasn't this easy, right? It's easy to me now because these are stocks that I've been trading in and out, right, for more than the last decade. So I know exactly what these stocks are capable of, right? I know their behavior. I know how to assess their fundamentals. I know what makes sense. I know what shows me that they are already dirt cheap. Why? Because you're saying, but Terence, you said that the market can go down further. Yes, but these stocks are different. These stocks have hit rock bottom. All right, now what do I mean? All right, now let me just bang on the table over here. All right, why? Because right, I want to show you an example. If you look at Intel, right, now of course we started Intel over here, like somewhere here, right? And then some of you will say, but Terence, you say Intel won't fall. Yeah, right, it can fall, but how much has it fallen? What, from 41 it fell to here, 38. That's what, $3. I can take that. I can take a $3 drop in the stock. Right? But I want to show you something. If we put things into perspective, how disastrous, right, is this current move? Okay. Now, if I'm going to just put this indicator called standard deviation channel, all right? Okay, standard deviation channel. Okay. Now I'm going to apply it. Oh, sorry, I need to edit first, right? And then I'm going to apply it. Let me show you something better. Okay. Now I'm going to bring this now, right, to a 3-year. All right, a 3-year standard deviation range for this stock, which is a boring big blue O chip. All right, now can all of you tell me what are you seeing? Where is Intel trading in its 3 years standard deviation range? All right, leave a comment in the chat box. And this standard deviation, right? Okay, is set at 2, yeah. All right, so the bottom, the extreme top is 2 standard deviation. The bottom is 2 standard deviation, right, from the average. Right now, tell me what will you understand, right, from seeing this now? Is the stock price expensive or is the stock price cheap? Good. All right. Now, so Tanya and Eileen has started typing cheap. So when I see this, should I be worried? Should I be worried? Number one, the answer is no. Second, when I try to look at the fundamentals and then I see that Intel trades at a 6 PE, right? That means 6 times of its earnings. Now, for those of you just joining me from Singapore, right? Okay, now I just want to use this example. If you ever see one day that DBS, that OCBC or UOB, our biggest banks over here, ever trades at a PE ratio, right, of 5 or lower, what does it tell you if you have capital? All right, what does it tell you to do if you have capital? If you ever see the banks trading at 3, 4, or 5 PE ratios, leave a comment, okay? I rest my case. And yet, when I keep harping about Intel, and then you have people asking me, Terence, is it safe? Is it safe? Is it safe? I don't know. Why don't you tell? Is it safe? All right, as long as you can afford the stock, is it safe? You decide. So Terence, why is Intel being smashed? Simple, because Intel is a S&P 500 stock. And what happened to the S&P 500 last week? It was thrown from the top of the building to the bottom. Do you think Intel is going to escape? No. Plus, Intel is also part of the NASDAQ, which is technology stocks. It also fell even worse. Do you think they're going to be spared? No. But then, all right, they will be more measured. They will be more controlled. Look, if you're here right now, do you really see a company with a lot more downside? No, you won't. And that's why I'm choosing all stocks that are this way, right? All the stocks in our current portfolio, all the stocks, GPS, Abercrombie and Fitch, Harley Davidson, Verizon, PayPal, Target, Intel, Walgreens Boots, they are all in the same category. They are all in the same category. Number one, they're profitable. Number two, they've been profitable for a very long time. Number three, all of them are trading at PE ratios that are in single digits. So while the market is still expensive, I'm pretty much vested only in the dirt cheap stock, right? They are still dishing profits. And on top of that, right, not only are they dirt cheap stocks that are dishing profits, they are also companies that are paying dividends. Look, if you buy Intel here today, you are guaranteed a 3.8% return just from the dividends alone, just from the dividends that you receive. Yeah, okay, all right, now, and on Target, if you buy Target today, you will receive 2.9% return on the dividend alone. All right, and you are buying a 12 PE ratio stock. All right, now this is not single digit, but if you compare to what is done in the last 5 years, this is cheap because it is smashed. Right, it has been smashed. Look at the standard deviation, because this is also the weekly chart for the last 3 years for Target. Right, so many people keep asking me, Terence, is selling put options a good strategy because the market is bearish? It is not about the strategy. It's about how you use it. Right? It's like, how do I give a good example? It's like a weapon is no use if I give it to you, but you don't know how to use it. If you get what I mean. All right, because if I give someone, all right, a sword, all right, okay, but he knows how to use it. He's been using swords for the last decade. And then I give a gun to another person, but he has never fired a gun before. Who do you think is on the losing end? It's the same thing with the stock market. Right? If I give you any strategy at all, it's not whether it's good or not. It's about how you use it. Right? So I really want to do as much as I can to help retail investors, especially people who are listening to me right now, because right, you think I can add some value. Right? So, just by being here, you're investing your time. Right? You're listening to me, get angry, get agitated, whatever it is. If you're still here right now, that means, all right, I hope that I can help you. Right? Even that little bit. Right? I want to make some sense. I want to punch some sense, right, into how you invest, how you make your next investment decision. Right now, and if you think that I can help you go further, right, do really seriously think, right, about embarking on your investment, improvement with any of our mentorship, available. All right, okay, now just find out what they are, right? Find out our next nearest acceptance date, right? Get in one, right? Because these are things that I keep harping on. These are things that I keep talking about with my members week after week after week. Right, my members trade over 100 live trading sessions with me and my trading team, right, throughout the entire year. Right? Do you think at 100 live trading sessions, right, can help you improve as a trader, as an investor? All right, okay, now that is what we do. That's the level of commitment that we do over here. All right, now, so with that, let's go to our portfolio, ladies and gentlemen. All right, I think I've pretty much done enough damage, right, to your confidence. All right, so let's boost it up now, okay? All right, now, so let's check in on our positions over here. All right, now, so we do have a couple going. So let's go to the first one. So we have a GPS, right? 15th of July, $10 put option. We collected 51 cents, right, for this one. All right, where does it sit now? How much does it cost? Where is the stock? Let's check. So let's go to GPS. Yeah, oh, here, GPS. All right, now. So let's go back to a daily. All right, let's take away the indicator. Now, so GPS has fallen all the way down, but look, once the market gives a reprieve, right? All these cheap stocks are gonna bounce literally the hardest, right? Now, so we have this stock over here bouncing, right? Okay, 74 cents today, which is 8%, right? It bounces 8% today, right? So am I pressured? Am I worried? No, I'm not, right? My put option is what, $10? I've got 3 weeks more. 3 weeks more for this stock to fight. Yeah, okay, I'm not even worried about it. I going forward, I'm okay. Right? I'm really okay with this position. I have no worries at all. But it also means that for today, right, there's nothing I can do. I'm just going to sit on it. Yeah, okay, so I'm going to sit on this trade. Now, next one, Abercrombie and Fitch. All right, now, same thing, 15 July, right, $18 put option. All right, we collected 101. Now, so let's go look at the trade. All right, ANF, look, ladies and gentlemen, it bounced up over $1 today. All right, so let's go and look at our trade then. All right, it's a 6 PE ratio, 18. All right, how much is it worth? I can close it for what? Maybe 47, 48. The last traded is 47, 48. All right, does it make sense? All right, I can take about half of my profits with 3 more weeks to go. All right, half of my profits with 3 weeks to go. But the stock is still at 6 times PE. So my decision making is pretty much, right, do I close it? All right, but if I close it, is this today looking like a good day for me to get in on a new trade on another stock? All right, that already puts a question mark and reins me back. Why? The market has bounced, right, and the market has gone up, what, 89 points today. It's a good day. All right, do I really want to chase any of these dirt cheap stocks when it's doing on a good day? All right, or does it make more sense for me to sit, all right, on a current trade that still looks good, right, and still has some decent premium? That's how I make my decision. All right, weighing up pros and cons. It's not an impulse, right? It's not like, oh, I have profits, I'm going to run with it. No. It's always about rationalizing your processes, right? Because when you can do it this way, you're always calm. All right, okay, you're always calm because you're always trying to rationalize and making the right decisions that are supported, right? And you know, when you keep doing it this way, right, in the long run, your portfolio will always do well, right? Because you're not jumping left, you're not jumping right, you're not making different decisions all the time. No, your processes keep you repeating the same steps, right? Okay, that's what we practice, right? And that's what we come to week after week after week. That's my job as a mentor, to keep harping on you. That's why my mentorship programs can go as long as up to a year, right? Because it's a process. It's not one-off, yeah? Now, so this one, I'm probably going to sit on it, yeah? All right, now, next one over here, right, Hog, all right, Harley Davidson, all right, $31 put for 15 July, all right, we collected 85 cents. How is this doing today? All right, Harley Davidson, all right, it looked like it was going into the gutter, all right, and we had to bounce today. All right, so 31, all right, we can close it for maybe 75 cents today, but the stock is at 8 PE. All right, so 75 cents today. Would I close it? No, barely any profits. All right, I'm still happy with this trade. All right, now, so I'll sit on it. All right, okay, I'll sit on it. Next one, Verizon Wireless, $50 puts for 15 July. All right, we collected 104. All right, Verizon Wireless, $50 puts. All right, we collected 104. All right, today it will cost us about 70 cents. Nah. All right, the stock is still good. 9 times PE, I'm happy with it. All right, it spots a 5% dividend return. Why not? right? Even if I have to hold the stock, I'm happy with these valuations. Yeah, okay, now, so I'm going to hold on to this position over here. So no actions. All right, now, next one, PayPal, $72.50 put option, $3.10. All right, let's go have a look. $72.50 put, $3.10. $3.10. We have some profits. Nah, I'm happy with this stock. All right, I think 72.50 will hold. All right, now, why do you pause, Terence? My pause was not about whether I want to close this trade or not. My pause was whether I want to take the profits today and then move it to a next expiry. But I feel that today is not a good day. Why? Because the stock has already bounced up by $3. So if I move it today, all right, okay, volatility has made the option slightly cheaper. Nah, it's not a good day. I'd rather let the time wind it down, right? So I can make better profits. Okay, now, so no call on this. All right, now, next one, target, all right, 135, 15 of July, $2. $135, 15 of July, $2. Right, it's worth about 103 today. So we can collect about half the profits. Okay, half the profits. Let's have a look. The stock has barely bounced. All right, 135. The stock is at 150. All right, we are like 10% away. All right, for another 3 weeks. I'm good with this. I'm going to stay with it. Okay, so I'm going to stay. Right now, that leaves us with our two assigned stock position. Right, first one on Intel, right, where we paid $42.50 for this. Let's see if there's any meaningful cash flow for us to add. Okay, now, so let's go to 15 of July, Intel. All right, so I'm going to look at the $42.50 call option. 6 cents. I might as well not sell anything. All right, so I'm going to hold on to this, okay? All right, so I have no problem with the stock. Like I said just now, the stock is really cheap. All right, now, so I'm going to rather wait for the stock price to bounce, right, before I sell any call options. So no actions on this. Okay, our last position, ladies and gentlemen, all right, the Walgreens Boots. All right, now, so Walgreens Boots, all right, we paid $45 for the share. All right, let's see if we can add any call options on this trade today. All right, Walgreens Boots, $41.90, nice bounce. 45. That ain't too bad. All right, now, so I can add about what, 35 cents, right, for every stock. All right, now, I'll do this. So let's add a $45 call option for 35 cents. All right, okay, let's add it for 35 cents. So if you own the stock right now, okay, go ahead and add a call option on it. Right, only if you own the stock currently, okay? All right, that means if you didn't follow this trade, don't do this now. Yeah. So we sell 5 call options over here. These are called the covered call. All right, now, so we're going to do the 15th of July. Oops. $45 call. All right, we do it today, which is 24th of June. Okay, now I'm going to pocket. What was the price again? 35. All right, so it's definitely going to fill because this is the market price now. All right, so 35. So this is going to add another $175 in cash flow. So that's going to push our total this month's cash flow up to $2,800. I'm happy. I barely did anything, but I've still achieved my goal. I'm still on course. All right, so I'm definitely happy with what the portfolio is doing. All right, it's not close, so I'm going to leave it. I don't need any further cash flow to do this trade because I already own the stocks. So I have the stocks to deliver. There's no additional cost to add on this sell call option. All right, now, so my total exposure right now on the portfolio is still based on $99,500. So I'm about almost close. Now I should take it divided by current capital. I'm about 95% exposed, all right, based on my portfolio current capital. Yeah, okay, so I'm about 95% exposed in the market. Terence, are you comfortable with this exposure? I am. That's why I'm doing this. These are all live trades, right? All these trades are sitting inside the accounts, right? I'm not taking any action today other than adding, all right, a call option on our WBA stocks. Okay, right now, so ladies and gentlemen, these are the only actions I'm going to do today, right? Because the markets are up really, really big, right? So if you look at most of the stocks that I have on the screen over here, right, they are all up drastically today. So it's definitely not a good day for me to go, right, and collect cash flow. Yeah, amidst a bearish market condition. No, all right. So it's not a good day. I'm not going to attempt it. Right. Many of the stocks I'm targeting, right, has already hit, really, really high level for today. So no. All right. Now, Facebook user. All right. I'm not too sure who's this. All right, but I'm pretty sure they still do it. All right. Okay. Now let me see if I can find it. If they already stopped, I'm not too sure. Let me try to see. Oh, key ratios will be retired soon. Just go to key statistics then. That's what they're telling you, right? So you're just saying, here, key ratios will be retired soon, and then they tell you, please go to key statistics. So you can get this probably now from key statistics. Yeah? Okay? All right, now, Tanya. All right, now, so that's a good question. Why don't I choose a day to expiry or an option expiry, right, that is longer now? Yes, I am. I would. All right, I would if I was taking a new trade today. Yeah, okay, that's why I was pondering earlier about PayPal, because I'm considering that. But today is not the day I'm going to do any new trades. So that's why you didn't see it happen. So you're on the right chain of thought, just that today is not a day for me to take any new trades or action, right, for the portfolio. Yeah, okay. All right. Now, so I'll just take a couple of questions before I end off today's live session with all of you. All right. So if any of you, all right, maybe you have frustration about the market, just like I did today when I started. Right. You can leave it in the comments right now, and I'll see if I can help you. Yeah. All right. Thank you, Jimmy. All right. Okay. Because yes, Jimmy is right. Okay. Facebook user. All right. Okay. Another Facebook user. All right, we won't be able to know who's leaving the comments, yeah? All right, Jesslyn, you couldn't find it? All right, then, try various, yeah? All right, now, I believe you could Google it, to be honest. Google is really good, all right? Google it, all right? Just see where you can find PE ratios. Yeah, dividend payout ratios or dividend yields, stuff, whatever you want to find. I'm sure they're going to throw you out some decent websites. This is a good question. Terence, you can sell longer expiry, all right, covered calls on Intel. That's not the point. The point is this: the stock is still really depressed right now. So if I lock in a $45 call, all right, right now, I'm collecting premiums that are paid with the current stock price, right? And I think it's cheap. So as a stock owner, I do believe that the stock can go higher from where it is now, right? Now, so why don't I wait for that to happen? Then, all right, by the time it goes to 41, by the time it goes to 40, 42 maybe, no, Intel is 42.50, sorry. By the time it goes to 40, all right, I would be able to collect much more cash flow, all right, if I sell the cover call then. So it makes more sense. I don't want to collect 6 cents. Right? And if you go all the way to August, 6 times 2 months, 6 times 3 months, I don't want to collect 10 cents. I don't want to collect 20 cents. It's not meaningful because I'm stuck for the next 2 months. It doesn't make sense at all for me to do something like that. Yeah? All right. Okay. Now, so obviously we have a Facebook user who's throwing out some spams over here. All right. Now, I can't do anything about Facebook algorithms. I can only apologize for this. Yeah. Okay. But after the session, I'm just going to wipe it out after that. Yeah. All right, now, so I'm sure all of you are aware of this. So Don't click on it. Yeah. All right. Right. So Zaini is asking Terence, if trading new options on expiry date on Friday, the price is cheap. Is sorry, Zaini, I'm trying to get a full picture, but I don't really understand what you're asking. All right. Now, so maybe if you could type something really quickly, all right, I can try to help you over here. All right. But my problem is I don't really exactly understand what you're trying to ask. So I'd rather be accurate than to reply in the wrong manner. Yeah. All right, Ivy. All right, Terence, are you short-term bullish on the market, Ivy? Were you here when we talked about it just now? All right, Ivy, this is where SPY is. This is where S&P is right now. So do you think, based on what I see, there are reasons for me to be bullish on the market at this very moment? So Facebook user, that's another good question over here. I'd like to answer this. All right, so Facebook user, if you could verify your profile, that'd be great. Now, Terence, all right, you did say that the SPY has hit a double resistance over here, right? Now, so expecting the market to sell off, why don't we take profits today, right, on the bounce and then wait to re-enter? First, this portfolio is not a trading portfolio. Second, this portfolio actually has a cash flow objective every single month. All right, so third, have I already achieved my cash flow goal for this month with all the positions I have? Number four, right, if I close it for a smaller profit today, my cash flow can possibly drop below my targeted amount. What if I don't get the fall off? What if I cannot re-enter? That means I'm taking a chance of missing out my target just for a little extra profit. To me, I won't do it from an investment portfolio. If this was a trading portfolio, yes, I'm going in and out, but this is different. This is an investment portfolio. Can you see? Right? So the approach, I keep saying from day one, the approach is different. The approach is different because, right, of your objectives. Right? So every investment you make, right, on your portfolio has to stem from what the objective is. Yeah. Okay. Once you know your objectives, right, it will actually direct you, right, to the right management move. Yeah. Okay. I hope that kind of puts things in perspective. Yeah. Right. So another Facebook user. Right. So referring to the SPY chart in a moment, do we wait for confirmation candle? You can, right? But once you realize that once you wait for a confirmation candle, most of the time it's already too late. So why don't you try to assess where is the risk? Where risk, many times, right? I have students asking me, Terence, the risk reward, right? So you're throwing me risk reward, but when you analyze the potential move of the market, somehow the risk reward doesn't come into your picture. Right? This is the point where you should weigh your risk reward. Right? Why? If it goes up, right? If it breaks from here, where's the upside? The upside is what? 4,000. So that's about what? 150 points. Okay? Right? About 150 points from current, right? But if it falls, right, where's the next fall? 355. Right? That's 300 points. 150 point upside, right? If you're correct, versus 300 points on the downside if you're wrong. Where should you go with? I know where I want to trade. Yeah. All right. I know where I want to position. So that's how, yeah, that's another golden nugget. I'm not charging. Right. These are all things, right, that my current members will learn, right, on a week to week over here because I constantly assess the market, right, each and every week, right? And then we'll talk about this, we'll discuss about this. Yeah, okay. And then they will be learning off these kind of events over here. All right. Yes, Siu Yang. All right, Siu Yang, I didn't miss your question. I just had to go to others first. So between collecting premiums versus selling covered calls at lower strikes and getting rid of stock, your priority is the former. First, I don't have a priority. Number two, my priority is based on where the current valuation of the stock is, right? Because Siu Yong, if you realize, right, I'm holding on to stocks. Okay, the two assigned stock positions, right, are what? Okay, are Intel. It's trading at a 6 PE. Okay, that's trading at a 6 PE. All right, and Intel, right, hasn't had much growth in the last, has steady, consistent growth, I would say that. And yet, the 5-year average PE has been 11. So that means this stock price can literally double. So when I know that the stock is severely cheap and it has a potential to double just to match up, just to be fairly valued from what is done in the last 5 years, what do you think my decision is between collecting premium versus selling a lower strike just to get rid of the stock and potentially losing money? Yeah. Again, reason, justifications, final decision. Yeah. Okay. Reasons, justifications, final decision. All right. So Xu Yong, I added another golden nugget over there. Yeah. All right. Now, so, all right, ladies and gentlemen. All right, I'm done. All right, I'm done for today's session. I hope you enjoyed the session. I'm sorry for going on a rage just now. All right, I hope you enjoyed the session and learned more stuff along the way as well. All right, and please, before you leave the session live with me, all right, if you can click on the like button, if you can hit the share button and reach out to more people, all right, I'll be really, really thankful. All right, okay, we're constantly going to build this portfolio live. All right, let more people come in and see it. Let more people expose their eyes to such a portfolio that can do them good. Right, because we have been performing even in the bearish of times. Yeah. Now, so if you can do that for me, I'll be really, really thankful. All right, and then, all right, see all of you next week, ladies and gentlemen. We're going to the new month. All right, our session next week is going to be the 1st of July. All right, now, so I'll see all of you next Friday. All right, and see what actions there is in store. Bye for now, ladies and gentlemen. I'll see you really soon. All right, good night and have a really good weekend. Bye-bye.